Hello, so it's Thursday, July the 2nd, and today we're going to talk about gold and an extraordinarily bullish chart pattern that has emerged. Now, you might be familiar with island reversals or pennants or double bottoms or falling wedges, and these are some of the many recurring patterns that appear in stock charts that now have their own names, and they're patterns that some traders might use to identify where a market is headed next. But looking for such patterns can be a dangerous business. There is the risk of all sorts of confirmation biases. Not unlike decoding tea leaves, when staring at charts you can often discern whatever it is you want to discern. On the other hand, many patterns also have this unusual, almost uncanny habit of playing out. So, with that disclaimer out of the way, today we're going to look at one such pattern that has formed in the gold chart over many years, and it is extraordinarily bullish. The pattern I'm talking about looks like an old school cappuccino cup with a little handle, the type we used before Starbucks took over. And you know the cups, they're white and you can sort of barely get your thumb and forefinger in the handle. Be quiet. And given that it looks like a cup and handle, the pattern in question has been called cup and handle. And there's a large bowl-like shape with the handle to the right. And it's a very bullish setup, and you tend to come across it quite often in bull markets. And one example might be in tech stocks such as Amazon and Apple and Microsoft. They had a huge bubble in 99-2000, so that would have been one side of the cup. Then they swooned into a bowl for about 10 years, and then sometime in the early part of this decade, they retested their old highs, the other side of the cup, consolidated around that level, forming the handle before launching much higher. And it kind of makes sense with growth stocks. There's the bubble, the correction, then the retest with the company now built on sound fundamentals. The market doesn't quite believe the new highs yet. There's still some price memory from before, some sellers who still need to be rinsed out, hence the consolidation. Then finally, the old highs are broken and it's off to the races. And I remember first coming across the cup and handle pattern during gold's last great bull market. It was around the turn of the decade. Gold had broken the $1,000 an ounce barrier for the first time in early 2008. Then the global financial crisis came along and gold sold off along with everything else. But by 2009, it had rallied back to test its old highs. But it just couldn't get through. But rather than selling off, it just sort of loitered about or just below for many months, thereby forming the handle of the cup. And by the autumn, it had got through and it was off to the races. So let's take a look at the chart. So here's that cup and handle drawn over gold over that period. This is the first run up in 2008. Then you can see the sell-off, then the retest of the high, and then the loitering around. So there's the cup and there's the handle, and that dotted line, that's the sort of the rim, or if you want to continue the cappuccino metaphor, the froth. And you can see that it loitered around for 9 months maybe, and then once it was through, it was off to the races. You can also see what I mean when I say it's a tad arbitrary. And one way of calculating the eventual bullish target, and this is where it gets a bit voodoo and quackery, we're in the realms of quackery here, but you measure the distance between the rim and the bottom of the cup, and then that's the distance that it should go once it breaks through to the other side. So the rim of the cup was at 1020, the bottom was around 700, the distance between the top and bottom was $320, and so in this case the upside target would have been 1340. As it happened, gold went to 1920 in 2011. So that was a cup and handle that played out over a couple of years. What we're going to look at next is a cup and handle pattern that's playing out over a few months. This is since early April, and you can quite easily make the argument that a cup and handle pattern is starting to take shape now. There's the rim, the dotted line at the rim. That was the rims at about 1790. We first went to 1790 in mid-April. then we sort of had a bit of a sell-off, and now we retested that level about a week ago, and now a sort of handle is forming. The difference between the here we get into quackery zone. The difference between the rim and the bottom of the cup is $125. So that's a $125 rally we should see if gold breaks to the upside, and that rally would take us above 1900 and into the retesting gold's all-time highs zone, which would be nice, let alone form the handle, so don't get too excited. But in any case, here's gold since 2001, and you can see the huge bull market of the noughties. Reached that high 1920 in 2011, and then this decade it's been in a bear market until about 2015, 2016, and since when it's rallied. We're only at about 1780, 1790, but if this little cup and handle here takes us back up to the level here, and then you know, it's a very bullish saucer, and then if we meander around there, we'll have the cup. Now the rim of this cup is at 1920, and the low here is 1050. That's the 2015 lows. That's a different sort of 870. So that would give us a long-term upside target of 2,800. I'd take that. Which brings me to what started this article in the first place, the mother of all cup and handle patterns. That's not a cup and handle, this is a cup and handle. We're going to look now at what is known as the real price of gold. That is, gold adjusted for inflation, the CPI, the Consumer Price Index inflation, since 1970. And you can see the peak, 1980, that was the Afghan war and the Iranian hostage crisis. And gold went into its 20-year bear market, and then we had the bull market of the noughties, when in inflation-adjusted terms, gold simply retested its old highs. And then since that retest, we've been forming this cup and handle pattern. So it's a cup and handle pattern that's formed over many decades, 40 years, and you know, it's extraordinarily bullish. And if you use the bottom of the cup to the rim formula to measure the upside target, well, it gives us a gold price of, well, one that you should be able to retire on. It also suggests rampant inflation and a possible reset with gold valued much higher. How likely is that? I don't know, but it's what some on the fringes have been saying for some time now, and how often does the fringe become the mainstream? So there we are, a chart pattern to get very excited about, or a bunch of hocus pocus tea leaves, or perhaps a bit of both. Thank you very much for watching. Please subscribe to my channel. I'll be back with another video very soon. And please look out for my books on Audible, on Amazon and elsewhere. And see you soon. Thank you.